Hello, my name is Todd Caldwell with the State Board of Accounts, and I will be handling part 2 of the information and training on importance of local policies. Next up is investment policies. Indiana Code 5-13-9 governs the investment of public funds. The fiscal officer is the investing officer. The council is the fiscal body and is responsible for adopting an investment policy if it chooses to do so. Pursuant to this statute, the council may adopt an investment policy. If it chooses to adopt this policy, the policy must meet certain requirements that are listed in the statute. For example, it must be in writing, adopted at a public meeting, provide for the investment of public funds with the approval of the investing officer, provide that investments must be made in accordance with Indiana Code 5-13-9, limit the total investments outstanding, and that limitation is defined in the statute, state a date on which the policy expires, which may not be more than 4 years after the date on which the policy takes effect. So if your city or town has a policy already, it may be expiring soon if it hasn't. If council chooses to adopt the policy, then it must also adopt an ordinance authorizing investments with a stated final maturity of more than 2 years, but not more than 5 years. The requirements for this ordinance are also discussed in Indiana Code 5-13-9-5.7. Leave and overtime policies. Each unit must adopt a written policy regarding the accrual and use of leave time and compensatory time and the payment of overtime. Negotiated labor contracts approved by the governing body would be considered as written policy. The policy must conform to the requirements of all state and federal regulatory agencies. So when we come in to do an audit, we're going to test to see that employees are receiving the leave benefits set forth in your policy and that overtime is being paid in accordance with your policy and all state and federal requirements. Your leave and overtime policy must be set forth in ordinance as per Indiana Code 5-10-6.1. If you have any questions on how to apply overtime, who gets overtime, and so forth, we recommend you contact the Indiana Department of Labor for guidance. They're the experts in this area. If you have questions related to payroll taxes, we recommend you contact the Internal Revenue Service and the Indiana Department of Revenue. You do need to have internal control procedures in place to ensure that leave and overtime are being applied correctly. State Board of Accounts has prescribed 2 forms, which are illustrated in our manual, Forms 99A and 99B, which are called the Employee Service Record and the Employee Earnings Record. Prescribed Form 99A. The form has to be kept for each office or department and for each employee in order to properly prepare the payroll schedule and voucher, which is General Form number 99. 99A records the hours or days worked, sick leave, vacation, and days lost. It may also be used to comply with the requirements of 511.94 regarding recording hours worked each day by an employee. The next slide is on materiality thresholds, and council has the responsibility for adopting a materiality threshold policy. It's important that you read this directive in its entirety, as it has lots of valuable information on how to establish this policy and what items to consider. State Examiner Directive at the link in the middle of the slide, 2015-6, is the one that directs each unit to have a materiality threshold. You can find that at that link, or if you go to our website, in.gov/SBOA, on the homepage, there's a button/billboard that you can click that's called State Examiner Directives. The policy that your unit adopts assigns a dollar value to any variance, loss, shortage, or theft which is required to be reported to the State Board of Accounts. Your city or town may already have a policy in place. Council is not required to readopt this policy unless it chooses to. If your city or town doesn't have a materiality threshold, then all variances, shortages, or thefts are required to be reported to the State Board of Accounts. If you haven't adopted that, we are considering your threshold as 0. For the materiality threshold policy, Council will want to designate a person or position to which all irregular variances, losses, shortages, and thefts are reported. Multiple individuals may be designated if each individual follows the overall materiality policy. Council will also want to establish dollar thresholds at which point the designated person will report the incident to the State Board of Accounts. Council may wish to consider 2 different thresholds for incidents involving cash and incidents involving all other non-cash assets. Council will also want to create an outline of steps to be taken if a variance, loss, shortage, or theft comes to the attention of the designated individual. Such steps may include logging in all reports into a spreadsheet that is permanently maintained by the city or town, confirming the dollar amount of the variance, loss, shortage, or theft, evaluating the report against the established dollar thresholds, and sending a letter to the State Board of Accounts when the report exceeds the threshold, investigating the cause of any variance, loss, shortage, or theft, implementing corrective actions or internal control procedures to correct the cause, maintaining copies of relevant documentation, a resolution of incidents, and any report to the Board of Accounts in a centralized data folder. Here's another twist on the materiality threshold if it involves misappropriation or theft. The previous slides involve any losses or variances or thefts not related to a public official actually stealing something. This misappropriation more deals with a public official or an employee actually taking something, whether it's money or assets or something, and as a misappropriation. Indiana Code 511-127L requires public officials who have actual knowledge of or a reasonable cause to believe that there's been a misappropriation of public funds to immediately send written notice of that misappropriation to the State Board of Accounts and the prosecuting attorney in your county. The threshold amount set in the materiality policy that we talked about on the previous slides does not apply to a misappropriation of funds by public officials. All instances of misappropriation must be reported to State Board of Accounts and the prosecuting attorney in writing. Indiana Code 36-1-20.2 requires each city or town to have a policy regarding nepotism. This policy governs situations involving the employment of relatives. The statute defines the term relative and the phrase direct line of supervision. Cities and towns can adopt more stringent requirements if they so choose. The policy should have already been adopted by your city or town and should be contained in an official book of ordinances or resolutions. If you're having trouble finding it, the fiscal officer can log into Gateway and check for the upload on the 100R main menu. If your city or town has a newly elected council, city or town is not required to readopt this policy, but the new council can do so if it desires. Any requirements or updates to the policy should be uploaded with the 100R submission by July 31st. Otherwise, the previously adopted policy will roll forward with the new 100R reporting. For more information, please refer to the statute and the Cities and Towns Bulletin, March of 2016, which is available on our website at sboa.in.gov. or in.gov/SBOA. And keep in mind, too, a nepotism policy is necessary for budget approval by DLGF. Per the statute, if your council hasn't adopted a nepotism policy, the Department of Local Government Finance, DLGF, will not approve your budget. Assets of the unit may not be used in a manner unrelated to the functions and purposes of the unit. Therefore, each unit must have policies in place governing the use and safekeeping of assets. This should include the use of logs, like for a certain vehicle use or a de minimis use as appropriate. The Code of Federal Regulations contains certain procurement standards that each council member and fiscal officer will want to be familiar with if your city or town receives federal funds. Each city or town must use its own documented procurement procedures, which reflect state law and local policy, as long as the procurement also conforms to applicable federal law and standards identified in 2 CFR 200.318. This one we get a lot of questions about, small purchases policy. Each city or town should have a policy regarding small purchases, which are defined in Indiana Code 5-22-8-2 as those purchases which are less than $50,000. As you may know, certain quoting or bidding requirements apply to purchases in excess of $50,000, depending on the amount of the purchase and some other factors. We encourage you to locate your city or town small purchase policy, if there is one, and determine whether council wishes to continue with the existing policy or make any amendments. If your city or town doesn't have a small purchase policy, we recommend that one be created. We do have a best practices document available on our website, which will help guide you through a series of questions and items to consider for your policy. For example, authorization. Will purchases be made by each department or handled by one purchasing agent for the unit? What approvals are necessary for certain dollar amounts or types of purchases? How are those approvals documented? Certain types of purchases are prohibited or restricted? And when are employees authorized to make purchases and be reimbursed? From a control standpoint, do we have procedures for determining the most cost-effective purchase? Is there a procedure to ensure sufficient appropriation exists for these purchases? And how will we determine if the purchase is necessary or that the quantity purchase is justified? A travel policy is very important so that everyone knows what types of expenses may be paid and when. In your travel policy, consider defining travel status, provide an amount per mile for mileage reimbursement, set per diem amounts or set guidelines for meal reimbursements, define appropriate expenses and the documentation needed for those expenses, provide a method for submitting a claim for payment or reimbursement, determine who is responsible in the event of travel cancellation. Sometimes we see where a person will, or an employee will buy airfare to a conference and maybe even pay the conference registration fees in advance. And then something happens between the time of purchase and that conference, and that employee is not able to go. And as you know, with airline tickets, that's in a person's name. So if you have an employee who does that and can't go or quits and doesn't work for your city or town anymore, who's going to be responsible for the price of that ticket because the employee who left isn't going to be going anymore? With a clear policy, the fiscal officer and the council will be able to audit and evaluate the claim for compliance with the policy. Hopefully this presentation gave you an idea of how important it is for council to set formal policies for the various activities of the town. An expectation of compliance with those policies is an important principle in internal controls related to the control environment. We thank you for taking the time to sit through and listen to both parts of the policy presentation. Please feel free to contact us if you have any questions. cities.towns@sboa.in.gov. or 317-232-2513. Thanks.